Most people are late. They buy what's trending, they follow hype, they chase charts. But the people who make real money, they find the winners before the headlines, before the media, before Wall Street wakes up. Right now, there's a company almost no one's talking about. It just went public. It's not profitable. On the surface, it looks like a gamble, but under the hood, it's signing billion-dollar contracts with OpenAI. It's backed by NVIDIA, and it's scaling at hyper speed. On paper, it shouldn't work, but when you dig into the numbers, it's undeniable. This isn't speculation, this is execution. And today, we're doing what nobody else is doing. We're breaking it down, no fluff, no headlines, just the truth. Let's get into it. A 420% revenue jump in 1 year. Not a typo, not a rounding error, that's the actual number. And if that doesn't make you stop what you're doing, you're not paying attention. This company went from $188 million to $982 million in just 12 months. That's not growth, that's detonation. And it didn't come from hyper speculation. It came from locked-in multi-year contracts with some of the biggest names in AI. You don't go from zero to nearly $1.25 billion without serious demand. And they're not guessing. They've got a $25.9 billion backlog to prove it. That number is up 63% in 3 months. That's not a trend, that's a freight train. And here's the kicker. The largest piece of that backlog, OpenAI. $11.9 billion through 2030. Signed, committed, done. They're not building some cool app. They're supplying the infrastructure that runs the AI economy. Over 250,000 NVIDIA GPUs already deployed. Not planned, not ordered, live, in production right now. So let's stop pretending this is a maybe. This is the fastest scaling cloud infrastructure company on the planet right now. Period. So if you're looking at AI stocks and you're not watching this one, you're watching the wrong game. Do you want to know if a business is real? Look at who's paying them. Coreweave isn't signing startups. They're signing killers. Microsoft, OpenAI, IBM, Meta. These are the companies building the future of AI, and they're not experimenting, they're scaling. On Coreweave, Microsoft alone accounted for 62% of Coreweave's revenue in 2024. That's not a customer, that's a dependency. And they're not walking away from that relationship without ripping out billions in infrastructure. Then there's OpenAI, $11.9 billion committed through 2030. This isn't some handshake deal. This is a locked-in contract to provide the GPU power that runs ChatGPT and everything that comes next. IBM using Coreweave for their Granite AI models. Meta running GPU workloads. These aren't one-off wins. This is embedded infrastructure inside the world's most important companies. The demand is real. The money is locked. The customers are giants. Here's what that tells you. Coreweave isn't chasing the market is chasing them. You don't need to guess where the money's going. It's already there. You just need to follow it. NVIDIA doesn't just invest in anybody. If they put money into a company, it means one thing. They plan to make money with them. And that's exactly what's happening with Coreweave. In 2023, NVIDIA dropped nearly $100 million into this company, making them one of the largest outside investors. But this isn't some passive equity stake. This is a strategic move to secure the infrastructure layer of AI. And NVIDIA is betting Coreweave will dominate it. Why? Because Coreweave isn't just a customer buying chips. They're NVIDIA's single largest cloud-side deployment partner for GPU infrastructure. 250,000 GPUs already online, and the next wave is built around NVIDIA's Blackwell architecture, which is only going to Coreweave's most advanced builds. That means NVIDIA wins on every front. They sell the chips, they profit from the infrastructure demand, and they hold equity as the stock runs. That's not a supplier relationship, that's vertical integration. But here's the part nobody's talking about. NVIDIA isn't the only one getting rich here. Applied Digital, the company building Coreweave's new AI data centers, just inked a 12-year deal worth billions. NVIDIA's chips go in, Coreweave runs the workloads, everyone upstream gets paid. This isn't a startup hoping to land contracts. This is a war chest backed by the most powerful semiconductor company on the planet. And they're not here to play defense. They're building the future of AI compute. You want to know who's next in line to be AWS for GPUs? This is it. And NVIDIA is making damn sure of it. Now let's get one thing straight. This is not a safe company. Coreweave is unprofitable, bleeding cash, and if they miss their targets, this stock could implode fast. Last quarter, they lost $314 million on a GAAP basis. Not over a year, 1 quarter. And adjusted or not, that's a burn rate you can't ignore. They're scaling fast, but they're spending even faster. Capital expenditures hit $1.9 billion in quarter one, and they're guiding up to $23 billion for the full year. That's not an investment, that's a financial fire hose. Miss even one major milestone and the entire machine seizes. Now layer in the debt. Coreweave is carrying $8.7 billion in debt. That's up from $7.9 billion just one quarter ago. Interest expenses are exploding, over $260 million in quarter one alone. Do you want to know what kills growth companies? Debt without discipline. And right now, they're walking that tightrope with no net. Then there's the customer concentration problem. In 2024, 77% of the revenue came from just 2 clients. Microsoft accounted for 62% on its own. If that relationship changes for any reason, Coreweave's revenue gets decapitated overnight. And don't think that risk is hypothetical. Microsoft is known to build its own infrastructure when scale demands it. One pivot from them and Coreweave could go from indispensable to irrelevant. So here's the truth. This isn't a steady compounding machine. This is a rocket with limited fuel and no margin for error. Can it deliver? Yes. But if you don't understand the downside, you don't deserve the upside. Everyone talks about growth. Nobody talks about the bill. Coreweave is burning through capital like it's unlimited because in their world it has to be. They're not building a product. They're building the physical backbone of the AI economy. In quarter one alone, they spent $1.9 billion in capital expenditures, and that's just the start. The full year guidance, $20 to $23 billion. That's the kind of money most public companies won't touch in 5 years. Coreweave plans to burn it in 12 months. So why isn't that suicidal? Because unlike most tech companies, they're matching every dollar spent with contracted committed demand. That $25.9 billion backlog isn't some forecast, it's cash waiting to be unlocked. Most companies build first, then pray for customers. Coreweave does the opposite. They close the deal, then scale to match it. That's the secret. It's not reckless spending, it's synchronized execution. The problem is the timing has to be perfect. Capital expenditures today doesn't pay off until infrastructure goes live. One delay in power, hardware, or delivery, and everything downstream gets torched. But if they hit, this model turns into a cash machine. High fixed costs, low incremental costs, and sticky enterprise clients. It's what Amazon Web Services did in 2012, except Coreweave is doing it with accelerators, not CPUs. That's why the burn rate doesn't scare me. It's the execution risk that matters. If they build what they said they'd build, when they said they'd build it, this thing scales like nothing else in the market. The question isn't whether they're spending too much. The question is, can anyone catch up? Let's cut through the noise and get real. This is where you decide if Coreweave deserves a spot in your portfolio or belongs on your watch list. Let's start with the bull case. Coreweave is building the infrastructure for AI at a speed we haven't seen since AWS. They're not a maybe in the space. They're already powering OpenAI, Microsoft, IBM, and Meta. They've locked in $25.9 billion in backlog, signed an $11.9 billion contract with OpenAI, and they're backed by NVIDIA. Not partnering, not hoping, backed. Their growth is unmatched. 420% year-over-year revenue and projected full-year revenue of up to $5.1 billion. This isn't theory, it's momentum, and their clients are sticky. You don't switch cloud providers with 2 billion workloads in production. You stay. Now the bear case, they're not profitable. Their losses are widening and they're carrying $8.7 billion in debt with rising interest expenses that could choke them if rates spike or if execution slips. 77% of last year's revenue came from just 2 customers. That's not diversification, that's a hostage situation. If Microsoft decides to build in-house, and they've done it before, Coreweave could lose its biggest revenue engine overnight. And the valuation? Stretched. Price to sales ratio is sky high. You're paying a premium for speed and betting they don't trip. Here's the bottom line. If you want certainty, this isn't your play. But if you want major upside in the AI infrastructure wave, Coreweave is one of the most aggressive bets on the board. Massive risk, massive potential, and the rare early stage opportunity that already has billion-dollar valuation from the biggest players in technology. You don't want to go all in and bet the farm, but if you size this right and they execute, it could be one of those legendary trades people talk about 5 years from now. The stock is up over 215% in the last month. You don't chase that, you wait. Here's the real question. Is this business getting stronger every quarter? Yes. Are the numbers trending up across customers, contracts, revenue, and cash flow? Yes. Is the production becoming harder to compete with? Absolutely. That's what you bet on. But let's be clear. Coreweave is not yet profitable, and anyone telling you otherwise hasn't read the filings. They're losing hundreds of millions per quarter, they're sitting on nearly $9 billion in debt, and they're pouring billions into new infrastructure every 90 days. This is not a short-term play. If they execute, I think they hit adjusted profitability sometime in 2026. GAAP profitability, realistically 2027 or later. That's the path, that's the timeline, that's the risk. So here's what I'm doing. I'm not buying the stock yet, not after a 215% spike in 1 month. That's when people potentially get wrecked. I'm waiting for a pullback, which will come. In the meantime, I'll be selling cash secured puts to get paid while I wait. Now, normally I don't mess with unprofitable companies, but Coreweave is different. They're not guessing, they're building, and they're backing it with billion-dollar contracts. If they keep executing like this, I want in. All right, I'm up 31% year to date. The S&P 500, it's up just 2%. That's not luck, that's execution. That's what happens when you stop trading headlines and start managing real capital. But don't just take it from me. Here's what Joseph said. Hello, Jerry. I'm up almost $200,000 this year and just started 3 months ago. Thanks to you. I mostly hold what you recommend in your videos, long-term stocks. I am forever grateful to you. I would have never bought Robinhood, for example. And Stephen, the first month using my system, he pulled in $4,845 in option profits. Now listen, you don't have to trade options to get results. Most of the gains in my community come from long-term, high-quality stocks. But when you layer in options the right way, it compounds faster and reduces risk. In fact, yesterday I sold cash secured puts on CRWV and they're already up 41%. Low delta, high premium, minimal downside. This is the kind of real-time move my Patreon members saw the moment I made it. Do you want to know why I think I've got one of the best damn Patreons out there? Because it's just like these videos. No bullshit, no sweet talking, data-driven, results-orientated. You don't need to be a trader. You don't need to guess. You just need to stop lying to yourself and follow what actually works. The same stocks I talk about here, in Patreon I show you exactly how I'm trading them, when I'm moving in or out, and how I'm managing risk in real time. The cost is just $30 a month, which is about 1 round of drinks. For that, you get full access to my multi-million-dollar portfolio, every trade, every position, every entry, every exit. And the reason why: no delay, no fluff, no guesswork. You've seen the results, you've seen the system. Now the only question is, do you want to keep guessing or join my Patreon and see what it's all about?